Ondas Inc. closed its latest trading session on Friday, May 22, 2026, at exactly $9.45 per share, marking an intraday increase of 3.51% as buyers pushed the equity up from its opening price of $9.2. Volume remained heavy, with over 59 million shares changing hands as market participants reacted to the major operational developments restructuring this defense technology enterprise. This brings the actual valuation of the company to approximately $4.5 billion, highlighting a massive surge from its historical microcap footprint. Looking closely at the intraday tape, the price fluctuated between a low of $8.98 and a maximum high of $9.57, showing that while structural accumulation is occurring, the day traders and institutional algos are actively battling over this current price level. If you look at this current valuation, the market is pricing in a massive operational shift, and the numbers reveal a narrative that is completely disconnected from what most Main Street investors still believe about this entity. The immediate reality that completely blindsides the average retail investor looking at this equity on standard investing sites is the absolute scale of its financial transformation that just landed in the first quarter reports. Most casual observers still view this business as a struggling, cash-burning wireless infrastructure player, but the actual data shows a staggering flip into deep profitability. The company just posted a massive quarterly revenue figure of $50.12 million, compared to just $4.25 million in the same period last year. Even more shocking is the bottom line, where the business swung from a net loss of over $14 million to a jaw-dropping net income of $361.25 million. This is an operational acceleration that normal hardware companies simply do not experience, creating a massive divergence between historical technical setups and current fundamental reality. When people look up standard investment help or look for emerging tickers on their individual brokerage platforms, the consensus expectation is usually built around a slow, steady expansion of drone contracts or incremental software upgrades. The consensus narrative says this company is a speculative small-cap asset that lives or dies by small commercial drone deployments. The underlying reality, however, is that management has aggressively repositioned the entity into a software-defined defense technology powerhouse with immense institutional backing. By securing a massive asset base and printing hundreds of millions in paper and realized gains via recent corporate structural changes, they have suddenly generated an M&A war chest reported to be over $4.2 billion. They are no longer just building platforms, they are buying up critical defense architecture globally, a strategy that changes the entire calculation for anyone conducting self-investing. To understand why the price action is moving with such intensity right now, we have to look directly at the institutional order flow and recent structural catalysts. Just days ago, the company finalized a massive agreement to acquire 100% of the Israeli defense software firm Omnisys in a stock transaction valued at $200 million. This comes right on the heels of another major consolidation where they integrated Mistral Inc., which even prompted a recent SEC prospectus supplement filing for the potential resale of 2,738,224 shares by historical holders. When an enterprise issues equity to absorb high-value defense tech firms, short-term traders on platforms like Robinhood often fear immediate share dilution, which explains some of the jagged daily swings and high short volume. However, institutional desks utilizing an advanced interactive brokers platform are seeing the broader picture, the integration of combat-tested resource optimization software directly into automated hardware. The trading volume we are witnessing right now reflects a massive migration of capital away from purely speculative commercial tech assets into hardened, state-backed aerospace and counter-drone systems. If you open up the Fidelity mobile app or monitor fund flows across major Fidelity Investments products, you will notice that small-cap defense innovators are attracting unprecedented momentum due to structural geopolitical budgets. The broader market is beginning to notice that this company's autonomous systems division is pulling down major sovereign defense contracts, moving it out of the speculative tier and into direct competition with legacy aerospace names. The sheer velocity of the price movement from its 52-week low of 80 cents up to this multi-dollar handle shows that institutional accumulation has been aggressive, frequently triggering automated block trades that absorb liquidity on the major investing sites. Comment below how many shares of Ondas Inc. you currently hold in your portfolio right now, or if you are keeping it on a watch list. When you break down the structural architecture of the corporate business model, it becomes clear how they engineered this sudden financial pivot. Ondas Inc. operates through two primary corporate pillars, Ondas Networks and Ondas Autonomous Systems. The network side is anchored by their proprietary full-max software-defined radio technology, which provides secure, wide-area private broadband communications for critical infrastructure like Class 1 railroads, massive electric utilities, and oil and gas complexes.
This technology allows industrial operators to run wide-area data networks over licensed frequencies with deep encryption. While this historical business provided steady, predictable utility-style relationships, it lacked the explosive growth scaling required to achieve a multi-billion-dollar market footprint. The real engine driving the current valuation explosion is the autonomous systems segment, which grew exponentially through the systematic acquisition of specialized drone and automated data businesses like Aerobotics and Centricus. This segment manufactures and sells the Optimus system, a fully automated, ruggedized drone-in-a-box solution designed to operate continuously in complex industrial and high-security environments without human pilots on site. Alongside this hardware, the company has integrated advanced counter-unmanned aircraft systems, including interceptor systems designed to physically neutralize hostile drones and cyber-focused detection platforms that track unauthorized flight signatures via radio frequencies. The revenue model relies on selling these complex automated systems paired with highly lucrative long-term software maintenance contracts, recurring data fees, and system integration support. Historically, looking back at the performance data across 2024 and 2025, the financial profile was deeply negative, defined by heavy capital expenditures and recurring net operating losses as they funded the development of their automated platforms. For consecutive years, the company reported annual net income losses, including a substantial $132 million deficit in 2025, which kept the equity deeply depressed and categorized as a high-risk microcap asset. Most individual investors checking their retail portfolios or scanning basic automated asset management platforms like Schwab Intelligent Portfolios would have flagged the entity as an unprofitable cash burner. The dramatic reversal in the first quarter of 2026, driven by a combination of asset revaluations, sudden defense backlog execution, and the consolidation of high-margin software businesses, is what completely fractured the historical bearish thesis. Looking forward into the remaining months of 2026 and into 2027, the central investment thesis hinges entirely on how successfully manages its aggressive global integration strategy. The optimistic scenario involves the smooth operational blending of the newly acquired Omnisys software layers into the existing physical drone fleets. If they can successfully deploy this unified operational planning software to international sovereign clients, their projected annual revenue guidance of at least $390 million could easily be exceeded, turning the company into a high-margin software and defense hybrid. Investors using advanced tools on an interactive brokers trading setup will be watching the gross margin lines closely. If software subscriptions become the dominant revenue source, the underlying multiple of the stock could expand dramatically, drawing in massive influence from specialized Fidelity ETFs and thematic active funds. The risk-heavy scenario, however, cannot be ignored by anyone focused on online investing or managed portfolios. Integrating multiple international entities simultaneously brings massive operational friction, regulatory scrutiny, and corporate overhead. The sudden jump to a $4.5 billion market cap means the market is no longer treating this as a small business with room to stumble. It has priced in near-flawless execution. If future quarterly earnings reports show that the massive $361 million net income swing was a temporary spike driven by one-off asset revaluations rather than sustainable recurring cash flow, the stock could face severe downward pressure. Furthermore, any hiccups in scaling production or any regulatory delays in transferring defense technologies between domestic operations and foreign subsidiaries would immediately compress the valuation multiple. When you compare this company alongside dominant market heavyweights like Tesla stock, Apple stock, or Nvidia stock, you realize you are dealing with an entirely different animal. While those megacaps command massive retail attention on every prominent Robinhood app dashboard, an emerging defense infrastructure stock operates on distinct geopolitical macroeconomic cycles tied to government spending rather than consumer trends. For individuals managing a self-investing strategy, balancing these volatile, high-growth defense assets against stabilized indices or automated allocations within an intelligent portfolio requires a clear focus on cold numbers rather than social media hype. The underlying corporate name change from Ondas Holdings Inc. to simply Ondas Inc. earlier this year signaled a desire to present a cleaner, more integrated corporate face to institutional allocators who manage major portfolios. Ultimately, the core tension defining this equity comes down to whether its operational reality can continue outstripping the market's rapidly rising expectations. For months, the expectations were incredibly low, allowing the massive first-quarter earnings beat to act as an immense catalyst that rocketed the share price upward. Now the baseline expectation has changed completely. Investors logging into their online investment accounts expect massive revenue growth, rapid global expansion, and immediate contributions from recent acquisitions. The contrast between what this company was a year ago, a deeply unprofitable, overlooked communication hardware provider, and what it is today, a heavily capitalized, rapidly expanding defense tech consolidator, presents one of the most drastic transformations in the current market. Whether you utilize basic retail apps or institutional wealth desks, tracking the conversion of their massive cash position into durable, recurring operating earnings is the ultimate key to understanding where the stock moves next. Disclaimer: this video is for educational purposes only, not financial advice. Please do your own research before investing. Market involves risk. Like this video, comment your thoughts, share with your friends, subscribe for more updates.